Hi friends, welcome back to Cheryll Trades LEAPS. Today, we're going to talk about something that's getting louder and louder in the market. Is AI a bubble? Every time NVIDIA moves, every time a new data center gets announced, every time another billion-dollar AI contract hits the news, someone says, "This looks like 1999. So today, I want to slow everything down. No hype, no panic, just structure. Let's talk about what is actually happening and what it really means for us as LEAPS investors. Why AI bubble fear exists. The fear comes from three main things. First, the scale of infrastructure spending. At the center of AI right now is NVIDIA. They are selling massive amounts of GPUs that power artificial intelligence systems. Demand is strong. Margins are high. Revenue growth has been explosive. When one company becomes one of the largest in the world that quickly, people get nervous. Second, AI application companies are not deeply profitable yet. Companies like OpenAI are generating billions in revenue. Running large models is expensive. Training them is expensive. Monetization models are still evolving. So critics say, hardware spending is exploding, but service profits are not scaling at the same pace. That creates what I call the monetization gap. Third, valuations have expanded quickly. And when valuations expand quickly, investors naturally compare it to past bubbles like .com, housing, SPACs. History makes us cautious, and that's healthy. But caution is different from panic. What is actually happening now? Let's zoom out. AI is not a concept stage technology. It is already embedded in enterprise software, cloud platforms, drug discovery, financial modeling, cybersecurity, customer support, coding workflows. Revenue is real. Usage is real. What we are witnessing right now is not imaginary demand. We are witnessing an infrastructure arms race. AI performance scales with compute. More compute. Better models, more enterprise adoption, more demand for compute. This is a reinforcing cycle. Now here's the key question. Is infrastructure spending running ahead of monetization? Yes, but that is common in early build-out cycles. Cloud computing looked capital-intensive before it became one of the most profitable segments in tech history. The difference between a bubble and a build-out is simple. Does long-term revenue eventually justify the infrastructure? We do not know the final answer yet, and that's okay. The monetization gap right now, hardware monetization is ahead of application monetization. Chip makers are printing strong margins. AI service providers are still refining pricing, enterprise integration, and recurring revenue models. That gap makes investors uncomfortable. But discomfort does not automatically equal collapse. Markets often overshoot expectations, both on optimism and fear. The real risk is not that AI disappears. The real risk is overextension. And overextension leads to volatility. What this means for LEAPS investors. Now let's bring this back to us. As LEAPS investors, our time frame is not weeks, it's years. We are participating in structural trends. AI is a structural trend, but structural trends still experience corrections. Here's how I think about it. If enterprise adoption continues accelerating, if AI integrates deeper into workflows, if revenue growth compounds over the next 3 to 5 years, then today's infrastructure expansion may look justified in hindsight. But if revenue stalls while spending continues rising, then valuations could compress. So what do? We stay disciplined. We do not chase euphoric breakouts. We prefer entering on macro pullbacks. We monitor earnings carefully, looking at revenue growth and margins, not just narrative headlines. We size positions assuming volatility will continue. LEAPS thrive when the long-term thesis remains intact, and the short-term fear creates discounted entries. They suffer when the structural thesis breaks. Right now, I see volatility risk, not structural collapse. And volatility is where opportunity lives for patient investors. So is AI a bubble? There is speculation. Yes. There is aggressive capital expansion. Absolutely. But this does not look like revenue-free mania. It looks like an infrastructure cycle with elevated expectations. And elevated expectations mean volatility. As long-term investors, we don't need to predict perfectly. We need to stay rational. Big money is made in big structural shifts. But only if we stay grounded when the noise gets loud. If this breakdown helped you think more clearly about the AI cycle, make sure to like and subscribe. And if you want deeper, calm analysis like this for Leaps investors, check out my Substack newsletter. As always, this is not financial advice. This is just how I think through the structure. Stay disciplined, stay patient, and I'll see you in the next one.